Looking ahead to the trading week beginning July 25th, we're coming off an up week on all four major indices, and all four major indices are now leaning on being up 3 of the last 5 weeks. So that's good news for stock market longs. But going into next week, we're at a much reduced level of yields across the curve. 2-year down 14 basis points on the week, 5-year down 16 on the yield side of things, 10-year down 13, 30-year down 11. Again, those are yields. And a lot of that coming in the last 2 days of last week. The inversions in the yield curve still persist. So when we're going into next week, we're going to be watching very closely that FOMC meeting that comes in the middle of the week. Right now, the CME Fed Watch tool has the probability the highest at 75 basis points. That's a shift from a week and a half ago when 100 basis points had the highest probability. Keep an eye on that CME Fed Watch tool as we go into that FOMC meeting. Now, big tech is going to headline earnings for next week. Some very big names: Apple, Microsoft, Google, Meta, Intel, Qualcomm, NXP Semiconductor, Roku, Comcast, Spotify, Texas Instruments, and Juniper Systems, all with earnings, along with some other big names like Visa, MasterCard, Exxon, Chevron, Honeywell, Boeing, Procter & Gamble, Coca-Cola, Anheuser-Busch, McDonald's, AstraZeneca, AbbVie, and Merck. Big earnings week next week. This is all going to affect the markets in general, and those yields I mentioned are going to affect commodity prices because they're going to affect the dollar. Now, data coming this week: Monday, July IFO business climate in Germany, Chicago Fed National Activity Index in the U.S., and that evening, Bank of Japan monetary policy meeting minutes. Tuesday, the Conference Board's Consumer Confidence Index for July and new home sales in the U.S., also, China industrial profits that evening. Wednesday, we get German GfK consumer confidence, inventories and durable goods in the U.S., along with pending home sales, and that FOMC interest rate decision that I talked about. Thursday, EU consumer confidence, economic and industrial sentiment, German inflation figures, average weekly earnings in Canada, and then jobless claims in the U.S., along with Q2 GDP data. That evening, Japanese unemployment and retail sales and industrial production data. Friday, German employment data, as well as German, Canadian, and EU GDP data, EU inflation, and then in the U.S., the PCE figures, personal income and personal spending, and the final July consumer sentiment from the University of Michigan, along with the inflation expectations.